Hi, Tim Bigham back again this week in a chilly Chicago, to say the least, and kind of a chilly market over the past few trading days, as today marks the fourth attempt for the S&P 500 to break out to new highs. Failed the last three times. We'll see if today is the lucky day to push through. We're kind of meandering back and forth between unchanged. The last I looked, S&Ps were up nominally, although not at the all-time high. So be interesting to see this tug of war where it ultimately resolves. We're going into turn of the month, which historically has been a very bullish period. Last three trading days of this month, first three trading days of the next month. That has accounted since 1990 for about 90% of the overall gains in the market here. So normally a bullish period, so we'll see if we can break through and if it has some legs after that. Other than that, the story certainly has been the momentum stocks, Tesla to say the least, which finally has run into a little bit of trouble here up around that 260 level. Yesterday traded up to 265, today up to that same level, and both times was met with some pretty good resistance. Actually was briefly down today. They issued or are going to issue a convertible issuance, which normally would be dilutive for the stocks. In this case, it is still. They did some hedging to maybe take away some of that, but it was met with some pretty good rejoicing after hours. A little befuddling to me from a trader's perspective that if you're diluting the stock, even though it is hedged a little, it still should have a somewhat negative effect. But Tesla, until now, seems bulletproof. I'm actually taking a short-term, somewhat bearish viewpoint. I'm buying some 250 puts that are pretty much right at the money that expire next week, hedging by selling 245 puts that expire tomorrow, paying about $670 for that spread, just looking for some time for Tesla to have some sort of a pullback here. The stock has been straight up and really hasn't had a down day of any consequence in about the last 8 trading days. So I think if we do see something get going, certainly the longs will be very quick to take some of those big profits off the tables. The shorts, if they haven't gotten out by now, I think are long-term shorts. So I think that squeeze that we saw may be over there. So I look for one of those, what I call, come to Jesus moments perhaps in Tesla, where you see the stock down, 15 to 20 one day. That's kind of what I'm positioning for, although hedging up front. If the February's expire, I will hedge then by selling some probably 240s next week and just go long a put debit spread there, looking for Tesla to drop, but again, hedging my exposure in case I'm wrong. Other than that, the VIX clamoring around 14, market kind of wishy-washy here. So I think it's kind of a wait and see, and I think the next move you want to either take advantage of its downside. I think we might see a pullback of 3 to 5%, about halfway down to the lows we saw a couple weeks ago. To the upside, new highs, it's hard to say where to hang your hat, but just go along for the ride till it pulls back. So until next week, this is Tim Bigham. As always, keep those position sizes in place and those stops going. Take care.